Hello and welcome to Strategic Alternatives, the RBC Capital Markets podcast, where we uncover new ways to raise capital, drive growth, and create value in an ever-changing world with insights and outlooks from our capital markets team. I'm Joe Coletti, your host for this episode, and today we're broadcasting from RBC's Global Energy, Power, and Infrastructure Conference here in New York. As we close out day 2, I've pulled a few of our bankers off the conference floor to join us for this discussion. We'll be talking to Jeff Cormack, Managing Director in Global Energy Investment Banking, and Mike Povaschuk, Managing Director and Head of RBC Rundle, which is part of RBC Capital Markets' energy franchise. RBC Rundle provides cross-border execution to energy companies looking to acquire or divest of assets and infrastructure in Canada and globally. We'll discuss some of their key takeaways from the conversations they've been having at the conference and hit on some of the key themes that are top of mind for companies and investors. Jeff, Mike, thanks for joining us.
Perfect. Great to be here.
Yeah, thanks for having us.
So let's start with the conference. You guys have been in a lot of meetings. You've been talking to a lot of people over the last 2 days. Mike, let's start with you. What is top of mind for companies and investors right now? What are you hearing coming out of all these meetings?
Yeah, for sure. Well, first thing I would say is just a great buzz in the conference so far this year. Been attending for a number of years. You can tell that there's a record number of attendance, whether it be investors or corporates that are presenting. Heard that we had over 2,000 one-on-ones for it. Lot of topical questions that have came up. A number have been around Canada, the tremendous resource that we have in place, the quality of that resource, and kind of questions around infrastructure. So on infrastructure, we are seeing a bit of a game change here in Canada. TMX is online, incremental 590,000 barrels a day exporting crude to the West Coast. And LNG Canada is coming on, an incremental 2 BCF a day of natural gas off the West Coast. So that's created a pretty good buzz on people asking more about Canada and the potential growth of our tremendous natural resources in Canada.
Jeff, what about you? What have you been hearing in your conversations?
Yeah, I would echo a lot of the same themes that Michael spoke about in a lot of the discussions I was a part of. We spent a lot of time talking about just M&A in general and activity levels. There's obviously been a bunch of activity in the first part of 2024 year to date, and we'd expect to see a whole lot more for the rest of the fiscal year, really driven by companies focused on achieving scale. It's obviously a key important theme here from an investor perspective. There's also the ability to grow more rapidly where producers haven't been as focused as much in the past in terms of organic development. So certainly M&A is very topical. I would agree with Michael's comment. Overall, there's been a lot of buzz.
On the M&A front, a bunch of things that have came up and questions around, why not Canada? Why aren't we seeing more M&A? I think it's important on that part to actually rewind the tape a little bit. And we actually have seen a lot of M&A and D in Canada. I'd say the differentiating factor between Canada and the US is over the last number of years, we've had a number of private, corporate, and large assets that have satisfied the acquisition needs of public corporates in Canada. So when you think about the top 10 producers in Canada and you look at the size and scale of those organizations back, 2-3 years ago, a lot of them actually completed a number of transactions and grown materially. If we look at the US, same trend a number of years back with A&D, and as that A&D supply dried up, there was more focus on corporate opportunities. So when I look at Canada, I see it exactly the same way. We've had that significant supply of assets. We've had significant supply of private corporates. We've seen a lot of those be cleaned up over the last number of years. And now, more focus on possible consolidation between corporate M&A.
Staying on M&A just for a second, you guys have a unique position where you're talking to these companies and you're maybe getting a little bit more of a view of what's in their heads, what's really impacting their decisions and their thinking right now over their next move, their next step. What is pushing them forward? What is holding them back? What are they sort of looking at really closely to really help kind of make some of these decisions in the sort of months and years ahead right now?
For sure. I'd say, commodity price environment and sentiment is a really important factor that considers into acquisition decisions. On that front, we've been in a period for the past, 6+ months where we've actually seen a lot of stability around crude pricing, plus or minus $75 a barrel on a WTI basis. So that's been really helpful from the oil side. I'd say with respect to gas, it has been significantly more choppy, right? Rewinding back to 2022, gas prices were high. Over the course of the last 18 months, we've seen some weakness. But when you look out, you actually see material contango in the curve, i.e. higher gas prices further out. So you do have entities that say, hey, we get pretty comfortable around an oil price environment, whether we're underwriting a flat US $75 deck. On the gas side of the equation, just more uncertainty with what does US power consumption look like, how quick is LNG build out going to be, what is demand going to look like, and what are people underwriting with respect to valuations that they're completing.
What do you think, Jeff?
Yeah, I might just add to that as well. I think that's created this interesting dynamic in the market when you think about sort of bid-ask spreads on the crude side with a bit more stability that Michael referenced. Transactions may be a bit easier to get done. On the gas side of the equation, just given how volatile commodity prices have been, particularly this year, and a little bit more stability into next year, it's created an environment where buyer expectations and seller expectations aren't necessarily aligned. So we'd expect as that starts to converge, probably an uptick in overall activity. That does speak to valuations a little bit when you think about, again, on the gas side and you look at where some of the gas weighted peers are trading on a 2024 basis, incredibly high multiples. So a bit of a read through from a market perspective and where, companies are anticipating commodity prices being in 2025. And, we view it to be a pretty meaningful catalyst to see more consolidation, aggressive growth plans on the gas side of the equation heading into next year.
And you mentioned valuation. So it's fair to say investors see opportunities. Are investors in Canada or U.S. seeing opportunities in the same way? Are they seeing more in any one area versus another?
Yeah, I'd say when it comes to Canada and you think about the valuation of the Canadian producer universe, in general, we have companies with extremely high quality resource, great business plans, great track record of execution, and in many cases, they are trading at a discount to their U.S. peers. So I think when you look at the infrastructure build out that we're seeing, the quality of resource that's in place, I think investors have been taking note of the quality of Canadian entities and the potential opportunities they have to invest in these companies.
I think also just from an opportunity perspective, in a couple of the conversations that we were involved when there was a big discussion around the opportunity set in the U.S. versus what counterparties are seeing in Canada. And it's interesting when you just think about the size of the U.S. market in terms of number of entities and size of entities relative to what we have in Canada, a whole lot more competition in the U.S. for opportunities versus what we're seeing in Canada. And I think that's actually starting to reverse a little bit where you've got U.S. counterparties looking across the border into Canada and creating a lot more competitive tension in processes that we're seeing.
So I want to turn maybe quickly to divestitures. There's been some notable divestitures recently. Mike, being the expert, can you shed some light and share some of your thoughts on what you're seeing and what your conversations are sort of revealing?
Yeah, for sure. So we have seen some pretty material divestitures. And if you look back to coming out of COVID, you saw this perfect environment where you had a number of entities that weren't the natural holders of large positions. You had an environment where acquirers had access to capital, and you had those same entities that had a desire for incremental size and scale for some of the things that we've been talking about. So it was this perfect environment where you had buyers, you had sellers, you actually had rising commodity price environment, which was helpful in facilitating transactions. A lot of questions come up with respect to international entities leaving Canada, and we have seen some entities kind of trim that back their positions. Think about Total reducing their exposure to their oil sands assets, which weren't core. You think about Repsol that's exited. You think about an entity, Tech Resources, focused on something different. But would also say that you've had some, large entities that have been very focused and continue to be focused on Canada. So Total left, and Conoco bought, half of that offering, the Surmont assets. You think about Northeast BC and the potential for LNG Canada. You do have some large international players that have upstream resource and plan to have upstream resource for a long time. So think the likes of Petronas, think the likes of Shell, mentioned Conoco. They've been acquisitive in the Montney as well as the oil sands assets. So I think sometimes it's taken a little bit out of context on all the international entities are leaving Canada, but we actually have some very large entities that once again see the quality of resource that we have in place and in some cases are looking to add to their portfolios.
All right, one final question for you both. And Jeff, maybe we'll start with you. You both have extensive experience in the energy sector. What other themes are you thinking about, do you see that the industry is going to continue to focus on and think about as we sort of move forward, not just the rest of this year, but I think even over the next couple of years?
Yeah, it's a great question. One theme that we see come up often is just sort of the regulatory uncertainty that we're experiencing in Canada. From a certain perspective, a lot of that's been alleviated with obviously the development of the Trans Mountain Pipeline and the Coastal GasLink Pipeline, major infrastructure projects that allow Canadian products access to global markets. We've got a bunch of existing and impending infrastructure projects like the Pathways Oil Sands Alliance that's going to allow for zero carbon production coming out of the oil sands sector. I think there's going to need to be a whole lot more regulatory certainty and a political framework in place to allow for investors to underpin investment within Canada. And it's a bit TBD at this point in time, with obviously upcoming provincial and federal elections still looming. But I think that's going to become an important catalyst that investors are going to heavily focus on when looking at opportunities within Canada.
For sure. And we spoke about it. We expect that consolidation continues to happen in the space, right? Just larger, more investable entities. And I think we are at a bit of a turning point with important egress coming on, Canadian molecules getting access to international markets outside of the US, a recognition from people on the quality of resource that we have in place, and just expect to see more deal activity.
Great. I think we will end it there. Mike and Jeff, really appreciate you hopping off the floor to join us last minute today. Appreciate your insights, and hope we'll have you back in the future.
Perfect.
Thanks for having us.
Thanks for listening to Strategic Alternatives, the RBC Capital Markets podcast. Please remember to subscribe to get more great content and be alerted about future episodes. This episode was recorded on June 5th, 2024. If you'd like to learn more or continue the conversation, please contact your RBC representative or visit our website at rbccm.com/strategic alternatives. See you next time.
This content is based on information available at the time it was recorded and is for informational purposes only. It is not an offer to buy or sell or a solicitation, and no recommendations are implied. It is outside the scope of this communication to consider whether it is suitable for you and your financial objectives.